Okay, I think we will get started. I want to welcome everyone. This is our first episode of the 2026 conversation series that we at Morrison Foerster have been honored to host with BSR. I'm Suz Mac Cormac here at MoFo, but more importantly, I am joined by Aron Cramer, who is the president and CEO of BSR. I'm assuming if you've tuned in, you know who Aron Cramer is, but he really is a leader in the world of sustainable business and has been for more than 25, 30 years, as long as I've known him. And BSR itself, in a space that over the last decade became very crowded, is a true expert in looking and making the linkages between ESG and sustainability and what is good for business, because really one feeds off the other in terms of really having a sustainable future. And so we started this a couple years ago, and I'm thrilled that we're going to continue. And so, Aron, I would love to start out with we're not going to spend all of this podcast, wringing our hands over the past, but I think it is important to put into context 2026, the learnings and shared experiences from 2025. So, you want to talk about your reflections on 2025?
Sure. And thanks, Suze. And, I would be remiss if I didn't shout out your great leadership as well. You really, excuse me, have helped to guide companies with a very clear sense of direction and purpose. And when I think of people who focus on corporate governance as it relates to sustainability, you are at the top of the list. And that's really important because that shapes so many things. So kudos to you and Morrison Foerster. I always like to say I'm a proud alum of MoFo, and have exhibited incredibly important leadership as well. Um, when I think about, and apologies, I do have a little bit of a cough. And when I think about 2025 and sustainability, I actually start with things that don't have anything to do directly with sustainability because it was a very tumultuous year in the global economy. And I think the big headline for me is that companies have in C-suites and boardrooms, the agenda is really complicated right now and full of really substantial changes. And I'll come in a minute to how this is affecting sustainable business. Obviously, trade relationships have been roiled, the on again, off again, but nonetheless important tariff regime that's come into play through the United States, and then the fact that other nations and trading blocs are making alternative relationships that's disrupted the global trading system, and played an important role there. I think we're seeing regional fragmentation around the world. Excuse me, um, which is very important. The role of the United States and Europe is shifting in the global economy, let alone on sustainability. Obviously, the rise of technologies, not least AI. This is on the minds of every business person. To use the cliche from the movie title, everything, everywhere, all at once. It is also causing quite a lot of change. And so these are all things, and political conflict and geopolitical conflict, which is in a heightened state. And I would add, if you look at the people who study these things, pressure on democracies, rule of law, the decline of democracy in many places around the world, these are all things that are having very direct impacts on companies. And so for Mr. or Ms. CEO, for Mr. or Ms. board member, even those that take sustainability very, very seriously for all the right reasons and so on, they have a lot to manage. My own point of view is that in many cases, sustainability is part of the answer to those dilemmas, not something that all of a sudden becomes a luxury because those very important
Mhm.
questions are in front of business. So that's number one. Number two, we are living in an era, and I'm sorry, I will play the Davos card a bit this morning. I haven't been in Davos last week. There were two comments that caught my attention. One was we are in an era of structural volatility. So the volatility is a norm. It is not a diversion from the normal course of business right now, number one. Number two, and this was from the head of one of the large consulting firms, said anyone who comes in with a slide deck, to the degree we still use slide decks, AI does it for us. It says with any degree of certainty, that person is a fool, and anyone who listens to them is a fool. Because we are in a period of trying to navigate change, achieve resilience, be prepared for multiple options, not certainty about where the world is heading. So those are the framework conditions. I will give a bit of a plug. Next week, BSR is publishing a paper on how to redefine sustainable business in amidst all of these changes. I hope you find it useful. And so this is what companies are navigating. On sustainability in general, let me focus on a few specific things. Responsible technology, and we'll talk about this in more detail a little bit later on. That's on the rise, and it's on the rise not only for the developers, the likes of OpenAI or Microsoft, what have you, but also the deployers. And who are the deployers? It's all of us. It's every company. It's all of us individually. How are we using it? What are the guardrails? What are the environmental questions? That has occupied much more substantial time on people's parts. On climate, there is progress that's happening. And I think I gave a talk in Davos last week and said we should think about the energy transition as a multi-speed transition right now. It is proceeding faster than expected in some ways. The growth of storage and batteries and the rise and drop in price on solar and wind, notwithstanding the cancellation of offshore wind projects in the United States, now in the courts, that's all going faster than normal. Looking at scope 3 reductions, companies being able to meet their midterm climate targets, that's going more slowly than expected. So I think those who would say it's fixed, we're on the right trajectory, I think that's overstating the case. Those who would say all is lost, nothing is happening, that's also overstating the case. We're in the sort of messy middle of this transition right now. One company, Siemens, gave a great talk last week about how AI is allowing them to find ways to help improve in some very substantial amounts the efficiency of our grids. And that's the kind of roll up your sleeves, get your hands dirty kinds of improvements that are going to move us in the right direction. Human rights, in some ways, is continuing to stay on the corporate agenda, particularly around human trafficking, which remains a huge, huge issue. But we haven't seen a pullback on human rights to the same degree that we've seen it in some other areas. And finally, I have to speak about diversity. And yeah, DEI is under a bit of a legal attack in the United States, political attack as well. The standard line from companies is we're doing a lot of the same things, we're just not talking about it, or we're talking about it differently or recalibrating it. I think that overstates the degree to which the work is continuing. I think there has been a pullback. Some of it, in my view, is probably well-founded, that some steps were taken that maybe were a bit more performative and maybe weren't accomplishing goals. But the underlying reality is that our workforces and our customer bases are getting more diverse literally by the hour in the United States and Europe. And any company that doesn't really address that thoughtfully, I think is missing the trick. And for business reasons, not because of anything having to do with woke capitalism. The last thing, and here's where I would give business an incomplete grade, perhaps at best, is, and I'll come back to this concept, but shaping the world in which business is done. And in the paper we're producing next week, we pose the question, what kind of world do you want to do business in? And this speaks to the fact that a polarized society is bad for business. A world awash in misinformation is bad for business. A world where science does not guide our decisions around climate is ultimately, maybe not in the short run, but certainly in the medium to long run, is bad for business. And I think the question of the business voice, when we get to 2026, I think that's going to be more on the agenda. And you've seen in Europe just last week, a number of large company European CEOs went on the record saying we have to stand up publicly for action on climate and other sustainability matters. We've gone too quiet, and that's bad for our business and it's bad for the world. So someone's going to write some interesting history books about 2025 at some point. It was a very consequential and a very complicated year for business in every way possible, not just sustainability.
Yeah, and
Suz, what's your take?
I agree. I think if we're going to get into 2026, I think 2026 is going to be more, more all of the above, more of the same. I would just add what I'm seeing, I saw a lot, is a return to sort of core ESG, which was from that 2004 report. Those of you who've heard me before, the term was coined by institutional investors who said, here are all of these factors, environmental, social, and governance, that are material to shareholder value and just not on the balance sheet. And it was ahead of regulation. And I'll get to it now. We have regulation, but what I'm seeing is people returning to, let's tie this very important work on human rights, on climate, to our value proposition, to our economics, number one, and also terminology matters. And so I agree with you. I think I see a more limited sliver than you do of the universe of people who are, really in the choir. But in fact, most companies and investors are not changing what they're doing. They just may be changing the terminology. So two things are happening. Number one, ESG is breaking apart because it does have these individual component parts, whether it's human rights, whether it's responsible tech. And number two, people are starting to just use different terms that are less politically loaded to discuss it.
I think it's a really, really good point. And I guess another thing that we can say for 2025, and I think it will hold this year as well, is if you look back the last 5 or 6 years, the drivers of company action on these things have changed. I think we've gone through three distinct eras. There was, I wouldn't necessarily cite Alan Greenspan's famous quote about irrational exuberance, but there was a lot of momentum and enthusiasm and rush to get to the head of the parade at the start of this decade. Then there was a shift where regulation was the primary driver of corporate action. As regulations gotten a little more complicated and less certain, that has declined. And I think it leads exactly to the point you made, Suz, is that this notion of back to basics, what's core to our business, where can we really make a contribution, and where are we really invested in the progress on a specific issue, particularly because of the nature of our business, the future of our business, what we're good at, what the opportunities are, et cetera.
Yep, and let's turn to regulation. I'm going
Great.
to, for those of you who are not lawyers, I'm going to give you the nutshell version. And if you guys have questions, please ask them. We can go deeper, or we'll refer you to people who really understand the regulatory framework. So one of the trains that has left the station in this area and is not going back is regulation. I say that, but you notice my first comment was ESG is a driver of value. I think if you look at ESG and sustainability and responsible business purely with a compliance lens, you miss at least two-thirds. And I'm a lawyer, and I'm probably overweighting putting it at a third. A business person or Aron might say you're missing actually 90% of the value proposition of ESG. But in fact, there is a regulatory overlay that is not being unwound. And I think when I describe the regulatory overlay, there are two factors. Number one, there is a lot of regulation regarding corporate action as opposed to disclosure. And that's what, Aron was talking about in terms of human trafficking and human rights in the US and all over the world, particularly through the supply chain. And then there is regulation regarding disclosure. I think people conflate the two. And on disclosure, I think it can be aptly described as crosswinds. And I start local and I go global. In California, you guys probably know there are three pieces of legislation. In general, one is disclosure of emissions using the protocol 1, 2, and 3. One is disclosure of risk, and one is disclosure that was intended to start providing transparency to carbon markets, but in fact relates to all green marketing. The first two have been stayed because you have a group that is challenging them. However, our advice to clients is it's going to come at some point in some form. So figuring out how and starting to measure, and every company should be evaluating climate risk in their operations, even purely for financial reasons. You're going to have to disclose at some point emissions, and you need to think about your marketing and making sure that you have backup for what you're saying. And so a lot of this, there's a regulatory overlay, but there's a reason to do it anyway. So California got to start preparing, but it's not in place yet. The SEC on climate, those rules are not coming back anytime soon. They've also taken off the SEC has also taken off the table the rules related to asset managers and ESG disclosure. So, and in fact, the SEC is and the DOJ are investigating what they're calling the climate cartel. So you've got a push in different directions in the U.S. Europe has taken a very, very complicated regulatory framework and has been dialing it back in terms of company disclosure with the omnibus and CSRD, in terms of disclosure Article 8 and 9 funds and SFDR and everything that is related. They are really revamping those regulations to do a variety of things. Number one, to give people more time. Number two, to make sure that they're focused more on, this is a general overstatement, more on single materiality. So more on what we said initially, the value to shareholders. And third, more to be in line with the ISSB, and I'll come back to that. So it is interesting. Europe's not going away. Regulatory requirements coming out, coming through the EU, going through the member states. Watch this space 2026, 2027, 2028. The leaders on disclosure are now in Asia, to be clear. Singapore, China, Japan, all throughout Asia, they are picking up the ball and saying, actually, these are key value drivers for investment and for our companies, and we are going to require disclosure. I think it's a positive thing. I mean, my one aside is I advise companies not to fully comply with CSRD at the beginning because I was 100% confident that it was going to be rolled back. So, and in fact it was, and those companies that spent $10 million have doing a double materiality screen with the accounting firms. None of that resulted in improvements. All of it was just a compliance cost, and it was a complete waste of money. And I mention that because it really irritates me, because we need to be focusing on solutions, which is again why if you view this just with the compliance lens, you're missing out. Which is why I want to go back to Aron, but I want to say one more thing. When I'm advising companies and investors, I really think a baseline is the ISSB S1 and S2, and they are revising their human capital, including tackling human rights and DEI. So that is of the 37 jurisdictions that have disclosure regulations, all of them generally follow. And one of the things Europe is doing is going back to sort of that as a baseline. And so it's a good place to start. But Aron, I know you guys, BSR does a lot of work. And in fact, in terms of the work that needs to be done to make sure you can disclose, there's really nobody better in sort of advising you, but also advising you of how to take this not just as a compliance for your legal function, but as something that your CFO and your COO and your president, your C-suite is going to care about because you're tying it to value. So I'm going to turn it back to you. Was that a summary in 5 minutes of the regulatory framework?
That was incredibly well done. I almost think you've talked about these things before, Suz. And
Shocking.
and no, I think that was absolutely right. There were a couple of points to pull out, and then a couple of points I'll add. I think you speak to the regional fragmentation a bit, and we're thinking about what we're calling the new geography of sustainability, which I'll come back to because I think it relates to regulation, but it relates to some other things as well. Singapore is a great example. It is a rising sustainability power and driving a lot of innovation and so on. So I think that point cannot be underestimated. It's really crucially important. I think I just want to underline what you said about companies should, excuse me, think about sustainability as value drivers, as drivers of trust, as resilience and strategic preparation for a changing world, I never felt, I never felt that the regulatory architecture that was being built was the right way to think about this. I was actually in a minority in my own organization. A lot of my colleagues were very enthusiastic about it. I think as you say, it wasted a lot of resources and time, and frankly, undermined the real value of sustainability. So I think the recalibration is quite healthy. Let me speak just in adjacent terms. There are other aspects of the architecture. The ISSB is a great example, probably the number one example, but there are things like CDP, there are things like the Science-Based Targets Initiative. We've got the Greenhouse Gas Protocol being updated this year, and the arrival of a new ISO standard. So there is in addition to formal regulation, hard law, there are all these other principles. And I think one of the things that we're going to see is a bit of a shakeout. People are bristling at the complexity of CDP. Some are concerned about the SBTI, although there are now 10,000 companies that are involved. The numbers are really amazing. To trade in rumors, there are a couple of institutions, I shouldn't name them because I'll get in trouble, that may be in a little bit of a dire place right now, that have been around this landscape for quite some time. So that too, that's an adjacent bit of the architecture. And then I guess for companies, what I would say is we in the sustainable business world believed that we were on a slow but steady pace towards convergence. We cannot assume that anymore. So the question is, to use the famous Wayne Gretzky quote, for companies, skate to where the puck is going, not where it's been. It's less clear where the puck is going. And actually, we could have imagined a couple of years ago that there was one puck. Now I think there's three or four pucks. And it's hard to play hockey when you've got three or four pucks. I grew up in Los Angeles, and yet I grew up playing some ice hockey. So I think it's just more complicated. And I think the North Star of business value, business drivers, compliance is necessary, but very far from sufficient or the most valuable thing. That's how to think about regulation. I also think that the political winds will shift again. I can't predict what will cause that, when it will happen, but we should not assume, just as we couldn't assume that what was coming in 2022 was permanent, I don't think we can assume that what's happening in 2026 is permanent either.
I agree. It is all shifting. And just to tease out one point, on climate and carbon and greenhouse gas emissions more generally, you have SBTI. I mean, this is, sort of separate from regulation. You've got the GHG protocol, which is separate from regulation and baked into all of the regulation in the 37 jurisdictions. So those are not going anywhere. But you also now have e-ledger, formerly e-liability, that folks like Exxon and your heavy industries are getting behind. And as you mentioned, the ISO standards evolving. So for companies and for investors, again, you're going to have the regulatory overlay, but more importantly, this is on the cusp of being built into your financial modeling and your balance sheet in terms of how you report to your investors. And again, to me, it's interesting. I think, just as my aside, disclosure, I'm representing the GHG protocol, but I'm also a fan of eLedger. I think both, they're slightly different purposes. It's like it's back when, for those geeks in the audience, GRI and SASB were trying to coexist. They have different purposes, and you can integrate, and I think use both. I will cite the work of Bob Eccles, who had a good article about sort of how to do both and as opposed to or. But do you want to say anything to that before I turn a little bit to the investment climate?
No, I think you made the points very well. Why don't we talk about money? And I'll just kick it off by saying I think you'll talk about some different things, but let's face it, corporate budgets are under pressure right now, very much including sustainability budgets. So after you talk a little bit about capital flow, Suz, I'd love to talk about that as well.
Yeah, and actually, before we go, we have a question, and for those who have questions, I before we move on capital flows, it's really a question on
Hmm.
how the CSO role has been evolving. And Aron, I know you work much more closely with CSOs. You want to take a minute or two?
Sure. This is a question on a lot of people's lips, so I'm glad you raised it. We did a report about 15 months ago now. We then updated it about 11, 12 months ago about the changing role of the CSO. There's no doubt that it's changed. I think we came up with four archetypes. One was the steady manager. You know, we do what we need to do, we do it well, but we don't, our company is not really trying to um, chart a new path. There is the strategic integrator in companies where there is a recognition that the questions that fall on the sustainability agenda are very relevant for their business. Not maybe not all of them, but many of them. It's your view of climate is different if you're Shell than if you're Nike, right? So there's that, and then there's the change agent, and we have seen some of those. I would say those are frankly few and far between. We added a fourth archetype, and this came after the US elections in November of 2024, the defender in chief, we called it, because as the backlash gained some steam, a lot of the CSOs that we work with in their candid moments, what they say publicly, what they say privately are often two different things. So I'm just fighting a rearguard action to keep my company focused. There is a lot of pushback. There is political pressure to pull back. Let's be honest about that. In the United States, the state of Texas and the state of California have very different views of things. And um, I think one thing that we've seen is that different expectations are no longer just inconsistent, they're now incompatible. And that makes it very hard for companies. So the role of the CSO is changing. If there's one dominant theme right now, it is staying focused, delivering business value, and frankly, an aversion to a lot of substantial new commitments. There are exceptions to that, to be sure. But the role was once sort of the grit in the oyster, it's like instigating change, often from the outside. Now it's much more about operators making sure that a company can get behind things. So there's been a real sea change, I think, in terms of what companies are looking for in terms of whether it's hiring a CSO or not or just what they are tasked with. I will say there's a reality here, and I know the New York Times is sniffing around this and may write a story about it, that the seniority level of CSOs inside companies has declined. I don't love it, but it is the reality. It's not universal, but in many companies, CSO has been demoted, someone leaves, the replacement's hired at a lower level, they get layered. They used to be on the executive committee, they're no longer on the executive committee. Budgets are being hampered. The cold hard reality is the role does not have the same power and influence today as it did perhaps a couple of years ago. I think time will again change that to some degree, but some of this I think is probably going to be part of the landscape for a while.
Yeah, I agree. And I often said that you could tell kind of how sustainability was viewed within a corporate organization by where the CSO sat.
Yeah.
If the CSO is answering to the head of marketing, that's one role. If the CSO has a direct tie into the CFO, and again, then has the ability to really link it to value, that's a different. It's a totally different function
Yeah.
within
Yeah.
the organization.
Yeah.
So let's turn a little bit to investment, and I like to divide the investment world into categories. And owners, then asset managers, and then the underlying companies in which they are invested. Um, I would say asset owners in the US are split depending on where they are. However, even in states where you can't say climate and you are running a pension fund, for example, for teachers, they're looking at returns. And if you are an infrastructure fund and are not evaluating climate risk, you're not going to generate great returns. And so, really, there's been a terminology shift. Um, However, for an asset owners outside of the US even more focused on climate and ESG. So in the US, some are, you still have leaders with California pension funds, with a lot of the family offices. You do have leaders who see the threat coming, and we'll get to AI and responsible business tech in a second. But a lot of the fundraising, I was meeting with somebody last night who runs a multi-billion dollar climate fund. All of their LPs are ex-US. Again, Asia, very heavily Asia, which would not have been true for a US fund, 10 years ago, and I find very interesting. And the Europeans, and particularly the Nordics, extremely interested. And a lot of it is because, they see how it's going to drive returns. So that is the asset owners. I would actually say on the asset owners, some of them are starting to require more from their asset managers. I commend to you ILPA and the EDCI in terms of what information they need around ESG factors to make decisions around deploying capital as LPs. Um, the asset managers, I have heard and had this confirmed that 2025 was the hardest year ever, including 2001 and 2008 to raise capital. And so if you're an asset manager who was struggling, you were not alone. That is loosening some for 2026. And it was particularly hard around ESG sustainability and climate. And really because it's exactly what Aron says. When you're making smart investment decisions, you need uh, a defined regulatory structure, regulation not changing rapidly and conflicting in many cases. And B, you need to know where the puck is going. And if you have three or four different pucks out there, it's harder to make those decisions. We are seeing that loosening in 26. And again, a lot of the funds that are focused on underserved areas, it's a great time because I do think there was irrational exuberance, and then heightened valuations, and now you have some good assets at good valuation. So when you come to the portfolio companies and the investment opportunities themselves, I completely agree with what Aron said. You've got, price parity with renewables. They make business sense. That is going gangbusters regardless of what's happening, and that's sort of worldwide. You've obviously got data centers. I would just say for AI, you have twin opposing forces. You've got a lot of innovation in AI for climate, and I would just commend the work of our friend Kate Brand and the Google's built out of infrastructure of how you can use AI to solve the problems, and the data center construction, which in some places like Texas is being fueled by gas, that is not helping emissions or helping our reduce our energy demands. Um, there has been increased focus on resilience. We're past 1.5 degrees. We're headed toward 3. I would say the increased focus on investment and resilience is really going from 0 to 40 miles per hour. It's still not where we want to be, but there was almost none before, and now there is more and more focus on that. And again, LPs like that and asset managers are focused there. And then you have, some of the newer still focused on EVs, and infrastructure and energy efficiency. So I agree with you. It's people are kind of calling it something different, but the investment is there. I want to pause because in addition to the investment, there has been a lot of innovation in terms of models so that companies can do more. Companies can do more. Aron mentioned, the leadership of companies and CEOs outside of the US and to some extent in the US as well. But philanthropic capital is less than 1/4% of the capital market. So we can't donate our way out of some of these problems. Corporate has to take action. One in the mainstream model, the sidecar public charity, which was Flexport, which was Starlink, is one very good model. Also, the PBC model. But I want to turn to that because I do want to leave some time to talk about AI and responsible tech. And one of the things that the AI companies are almost all using is the new models. But Aron, why don't I turn it back over to you and then I'll pick up again in a few minutes.
Sure. I mean, it's a great tour of the horizon, Suz. I think a couple things to add. One is you mentioned resilience, you mentioned infrastructure. And what's really interesting about that is that it's much more localized, it's much more practical. The direct benefits of these things are clearer, and they play to something that has reared its head in the sustainability world over the last year or so, which is sovereignty. You mentioned security, but security and sovereignty. And that means, can I be sure that the energy source will remain present? Will the grid be stable? And sustainability offers some solutions to that. And we talk a lot about states and nations. Let's talk about mayors. Mayors are intensely focused on these questions. And it doesn't matter whether you're in a red state or a blue state in the United States, you got to keep the grid up. And so that's why you see the city of Houston thinking about these things. You see a lot of cities in redder parts of America thinking about resilience, grid security, and in Europe, energy sovereignty is the topic of the moment. And the reality is that being subjected to global energy markets that are exceptionally volatile and subject to geopolitical risk, that's harder to manage and be certain of than other sources. I mean, we don't talk about this so much anymore, but France still gets about 75% of its electricity from nuclear energy. Well, guess what? It doesn't matter what OPEC does, doesn't matter what Vladimir Putin does. France can keep the lights on with a local source. And I think that's one of the reasons why nuclear is having a little bit of a renaissance. So security and sovereignty really important, and there are good investments there. There are good investments there. Grids, permitting, these are all things that are getting a lot more time and attention. And I think this is the physical art. We talked about the regulatory architecture. This is the literal physical architecture that keeps the energy system going. And those are good investments. Those are good investments.
Yeah, that's exactly right. And as we've seen, AI, at least to date, has been a good investment. And it is, you've got AI's impact on climate, and also, responsible tech was always part of ESG going back to 2004. But now it is, how do we build a system that doesn't just destroy humanity? So putting it broadly. Aron, back over to you, because I know this is an area, just for those of you who don't know, um, I don't know anybody other than BSR that is thoughtfully considering all of the links and all of the factors, the intersection between responsible tech and human rights, the intersection between responsible tech and supply chain, the intersection between responsible tech and climate, the intersection between responsible tech and civil rights. I mean, it's all, you can't, one of the, we didn't answer the question. One of the pitfalls I see clients often do is they have different silos. It's like, let's have our
Yeah.
anti-money laundering team over here and our climate team. And, maybe they meet in the hallway on, once a year. It is all related. And that's why I'm really glad that BSR is focusing on this.
Thank you.
Back
Yes,
over
and
to
we
you.
do. Thank you, Suz. We're doing quite a lot. Interestingly, one new question that's been emerging that we've been helping companies with is to what degree does AI create um, defense-related questions that are quite complicated for businesses to figure out. So it's obviously changing, to say the least. I took note of something in Davos this year that I thought was quite interesting, and I'll cite two resources that I would recommend to people to have a look at. The last 2 years in Davos, AI was everywhere, and there was frankly a lot of techno-optimism or techno-utopianism, and questions were sort of poo-pooed. It was very different this year, and you saw companies, including Anthropic, including OpenAI, including Microsoft, being very open and open-minded about how to address the loss of trust in the technologies as the acceleration is poised to take off. So these are questions that are more central. The two resources I would recommend, Chris Lehane is the head of global policy at OpenAI. He put something on the company's Substack last week, basically saying here's a populist approach to dealing with the social and economic implications of the AI revolution. He was the first to say, said this very publicly, I'm not sure everything I've written is correct. I'm not sure anything I've written is politically feasible, but these are the kinds of debates we need to be having. So it was, I think, a laudably open-minded approach to wrestling with some big questions. Dario Amodei has written apparently a 38-page essay. I have not read it yet, but I intend to over the weekend about his view of the economic questions and employment questions that are coming from AI. Other thing I would point you to, you gave a shout out to Google. They're doing a lot of thoughtful work. So is Microsoft. You may have seen Microsoft came up with a 5-point plan, I think 2 weeks ago, basically pledging that they will ensure that energy costs will not increase where data centers are located, that water is replenished, 5 separate steps they're taking to try to ensure that people are not put out, to use a technical term, by the rise of the data centers. Are they doing that in an altruistic way? I work with Microsoft to some degree, sure, but they also know that their license to operate, if they don't do these things, is going to be a big problem. And there are a lot of political analysts who would say that maybe not this year, but in the 2028 elections, you might get a little bit of a horseshoe dynamic where you have the left and the right coalescing to ask very profound, very fundamental questions, I should say, about AI and whether it's good for society. And the level of trust in AI in the United States is very low. The Edelman folks did an AI trust barometer. It was either December or January. The United States, Germany, and the UK have very, very low levels of trust in AI. The UAE, China, very high levels of trust and in AI. So in North America and Europe, there are a lot of questions being answered, and it's incumbent on businesses to look after this. The other thing I heard that's gotten my attention was it has become almost a cliche to point to the out of touch, quite possibly octogenarian member of the United States Congress who doesn't understand what AI is, can barely operate his or her phone. There's some real efforts have been made to upskill the members of Congress on AI in the last year or so. I heard the tech companies say that they feel like they're now talking to people who actually know what they're talking about, which was not the case a year or so ago. So this is moving center stage. It's key for business. And again, I would say it's key not only for the developers, they're investing a lot of money because it's existential for them, but also the companies that are deploying it. If you're, a Target, if you're a Pfizer, if you're a Nike, how are you using these things with the rise of agentic AI? What is that going to mean for your customers, for your employees, and anyone who employs even 10 people? How are you thinking about AI and employment? This is a revolution, and it is something that every company needs to have a thorough policy on. Living in the Bay Area, I've been hearing for 25 years every company is a tech company. That has not always been true. It is now true. And it is true in ways that present some really important questions that are board level discussions. These are board level discussions because the future of companies' trust with their employees, their employee base, these are all things that are being changed in such profound ways. So, I don't usually do plugs here, but Suz, you sort of opened the door. If anyone's interested in learning about how BSR can help your company navigate this, please don't hesitate.
Yeah, and I'll add, not only should you call BSR, but there are some groups. I mean, it's no mystery that Aron and I have spent a lot of this call talking about climate and AI. I mean, the area of sustainability is incredibly broad. A lot of it is very, very important. But those two factors alone will change everything about how we as humans and business operates. And so understanding how to navigate them through your investments and as a company is really critical. Um, and there is good work being done. I have not had time to share with Aron, but I was invited to a workshop from Positive AI Labs, which were led by some of the responsible and AI leaders at Meta and the Chinese entities, which I won't name, and Google and otherwise, which was eye-opening and sort of how really the next 36 months or 24 to 36 months are so critical to the database for LLMs. But there's work being done. But if I can go back to what I started with, which is talking about compliance, like climate, there's no way that regulation is going to keep pace. So it just happening so
Yeah.
fast
Yeah.
that the government is going to try to step in, but it's always going to be way after the fact, and it's not going to be terribly effective. Not because even if our octogenarians really understood it, it is because of the speed. All of the old rules on tech development are out the window. The speed of change for both climate and AI. So really understanding it and impacting every business, every consulting firm, every NGO like BSR, every law firm is critical. Um,
So can I just add
yep.
just one quick point on that? I think you're right that government is not equipped to keep pace. The issue I see, though, is that the public is going to demand answers, accountability, whatever the words are. And so there's going to be, I think companies are going to be between a rock and a hard place if the public grows disenchanted and government doesn't have the solutions. What does business do in that context? And I don't think the answers are simple. Some of the answers are things like the Partnership for AI and the kind of dialogue that you were a part of that can develop iterative ways to think about this. But I think solutions that will really clarify things, I think they're very hard because of exactly what you say, the dynamic and I don't use this word lightly, revolutionary nature of how the technologies are evolving.
Agreed. So let's turn to some predictions. Aron, this is going to be all you. I have some thoughts, but you see the whole ecosystem.
Yeah.
Predictions for 2026.
I think a few things. I think in terms of the external world, we should assume ongoing volatility. And that's economic, political, you name it. Um, in that environment, I would say to companies, the formulation we've been using is companies should distinguish between unexpected shocks and enduring transformations. Like, I can't predict what's going to happen in 2026 with any certainty, but I can predict that AI is going to raise more questions, that climate is going to have growing impacts on all of us in all ways, including the economy, including the availability of the natural resources that businesses need. I can predict that in a world that is more geopolitically uncertain, that supply chains will also have to be managed really thoughtfully and really carefully. I think we can assume that our societies, particularly in the US and Europe, are going to be divided. How do we deal with that? I work for a German company, the CEO, one of the largest German companies. The CEO put out a message before the German elections last year on the intranet saying, please do your citizens' duty and vote. It inspired a complete battle royal on the intranet between supporters and opponents of AfD, the far right party in Germany. So I can't predict with certainty where all these trends are going, but these are the enduring transformations that I think define our era. And so I think for business leaders, really focusing on those things that are most important. And however they play out in the year ahead, we know that these are the things that are going to define the next 5, 10 years of business and of society, and therefore the intersection of business and society. So I think there's that. The other thing is, so a little cheap political punditry, whatever's happened in Minneapolis, which has been horrible over this month, I think we can expect the unexpected in the United States, and I think let's face it, a lot of companies have really, at a minimum, tried to keep their head down with the Trump administration. Um, the traffic in politics runs two ways, and I think we might start to see a little bit of a shift, which is not that a lot of people have predicted the collapse of MAGA. I'm not saying that. I don't think that's going to happen, but I do think that there will be more crosswinds politically, and companies need to be ready for that. The tech companies have not had employee pressure very much over the last year or two. They're getting it again because of their relationships with ICE. So I would, if I'm a business leader, I want to diversify more my portfolio in terms of where I'm engaged, what statements I do or don't make, what my real commitments are, because I think the winds are going to shift.
Yeah, like looking through and the technology that ICE is using and tracking it
Yeah,
all back.
yeah,
And, some successful campaigns like on the private airline that was transporting
yep,
ICE. So
yep.
there is a public uprising. I just like to add, I'm going to sort of take two extreme ends. Um, on the micro, one of the trends I am seeing is the conversion of more companies to public benefit
Yep.
corporations. The back to the understanding in the business world that in fact there's not enough philanthropy to solve some of these problems, and solving some of these problems is good for business. And whether it's education in a community or healthcare in a community or climate in a community. And it has been interesting to me that many of the new technology companies are using public benefit corporations or social purpose, which are the dual fiduciary duties. So they have a duty to a public benefit in addition. And more companies are engaging with public charity sidecars. They are working with charities not for donations, but to actually sell goods and services. The nonprofit can engage in commerce um, that wouldn't make sense for the for-profit because it's too risky, it's too low margin, it's in our poorest and most depressed areas. And this ability to aggregate mainstream with concessionary capital is leading to real success for folks like Habitat Capital. Habitat is at the cutting edge of addressing the housing shortage in our poorest communities by folks of color, and looking at it not just about getting people in housing, but addressing all of the other issues, like again, climate leading to 200% rises in insurance, so you get people in houses and then they're kicked out. So the creativity in terms of, okay, the old corporate structures and forms and financing aren't working. Let's get a little more creative. I am heartened that I am seeing a lot of that. On the flip side, if we now go macro, the rise of both authoritarianism and totalitarianism is continuing and is getting extreme. I worry that social media and democracy actually can't coexist. I don't know what to do with that fact, but over the last 20 years, country after country have flipped. um, I read a lot. I don't have any inside knowledge. And Aron, I'd like you to comment, but a lot of this is driven by a fear-based rise of nationalism. We've got to take care of our own because AI is taking all of our jobs. And with climate, we start getting close to 3 degrees where we're headed. Food systems break down, and a whole swath of the world is uninhabitable. And so there is a fear, that the migration that is happening now is going to be tenfold in 10 years. And I think that there is a basis for that fear. And so the human instinct to hunker down and protect your own is and to be afraid of all of the change is real. And it's going to drive policy, and it's going to drive, I think, all of the efforts in responsible business. So those are kind of the two things I wanted to point out. But Aron, I want to give you the final word.
Well, look, this is so interesting because I think a lot of people in the world of sustainable business have been doomers for a long time, and I think we've overstated that case. Now I'm wondering if we're understating the case for the reasons that you cite and so on. I'll just leave everyone with a question that addresses that last point. And this is what we laid out in this piece we're publishing next week. The question is, what kind of world do you want to do business in? What kind of world do you need to do business in successfully? And what is the proper role in the private sector in shaping that world? And I think my call to companies is don't just be a market taker, be a market maker. The picture that Suz just painted is not a good picture when it comes to to running a business effectively, let alone the broader society. And so I think my hope would be that business can really take on these risks, partly because they come alongside a lot of amazing opportunities. And maybe I'll close on that high note, that the notion that a clean energy economy is a multi-trillion-dollar opportunity, the notion that the new technologies that we're developing won't be deployed consistently successfully if they don't have social support. The fact that there's all sorts of innovations that can be taken, that workforces can diversify and be better, stronger, more resilient, and so on. So I think it's important for businesses to try to shape these outcomes and we're not a campaigning organization at BSR, leave that to other groups, but I would say that I think business leaders should step up and try to shape our future and not just navigate the present. I say that with a full degree of respect for the fact that navigating the present is not a small task. It is a very challenging task right now, but only doing that, I don't think is going to cut it. And I think we're going to face more risks as enterprises and as society. And so figuring out where the opportunities for leverage are is really important, going to grow in importance.
Agreed. So stay tuned. We're going to have a whole series of these webinars for 2026, where we will sort of delve into more in depth some of the themes we have mentioned here. And I believe we have a live event coming with Autodesk on April 21st, right, Aron?
Yes, middle of the day,
Yeah.
San Francisco.
San Francisco, and we're going to be talking live to some of the leaders in tech about these issues. So we look forward to seeing you then.
Thank you all. Thanks, Suz. Thanks, MoFo.
Thank you,
Thanks
Aaron.
all for joining us. Bye.
Bye.